You know, it has to be a little weird to see your stock down more than 8% yesterday, down 8% this morning in the pre-market, when you just put out a quarter that basically blew the doors off. It was a very strong quarter. I didn't see any weakness. You raised your guidance for the full year. Are you kind of scratching your head over some of these moves this morning?
I mean, if I were going to be scratching my head every time I was confused by the stock market, it would be a scratchy head, I guess. Yeah, I mean, we really try to focus on what we can control, which is delivering great customer success, putting up the great financial numbers you talked about, and making sure we're building the best place for our employees to work. And I have a feeling in the long run, the stock market will take care of itself for us.
Yeah, it's been a bit of a wild ride. If you're looking back at how much the stock is up, it was up more than 227%, I think, before yesterday's decline. What was it like riding it on the upside?
I mean, again, we try to keep the focus both the upside and the downside with all of our employees to be kind of as level heel as we can be. And I think we've seen the phenomenon that people get excited, about the success we've had and how the market sort of reflects that success. But again, if we keep people thinking about the stock market, that's something we can't control very much. So we smile when we see those kind of successes with the stock, and it does feel good. But our big focus is trying to get everyone to be focused on customer success, because we know if we drive great customer success, our economics will be fantastic, and they have been since we've been public.
All right, let's talk about the numbers that you put out yesterday. In terms of the revenue, it was better than the street anticipated, but it was up by a little less than 10% above the estimates. In terms of the earnings per share, that was a blowout number. It was 17 cents a share versus the 8 cents the street was expecting. So that's more than double the expectations. That tells me that the margins were much better than the street had been anticipating. What happened?
Well, as we scale the business, we are continuing to focus on growth. And this is a growth company, and we will absolutely shoot for that apex of the growth opportunity that we see. But with that scale does come some productivity and some efficiency opportunity. And in our long-term model, where we track this sort of 20-25% operating margin, we are feeling we're right on track. We're slightly ahead of plan for there. We're right on track with that. So it wasn't a big surprise to me to see that extra growth drop to the bottom line, as you just articulated.